what are the chances we go into a recession? And, a second question for you. Elon was recently on Lex Fridman for, I think, 8 days or something. It was like a record podcast of how long he was on. But one of the things he talked about was that he had discussed with Trump, and Vivek has been very strong about this on our podcast and other places, and he was a leading VP candidate, of making the government more efficient and radically cutting the amount of spending. But there would be a reaction. So does the potential GOP administration have a platform to cut costs massively or not? And do you think that, that would have been maybe too unpopular to sort of unveil that plan now as a presidential candidate in either party?
I don't think they have that plan specifically, because I just think that you would need a supermajority in Congress to do something like that. And I just think that this election's going to be too close, regardless of who wins, to provide that kind of mandate. I mean, sadly, I think we do need to get government spending under control, but I think it's a long-term political problem, and I just think our political system doesn't have the will to fix it. I do believe Republicans will be better than Democrats on that, but I think that's the truth of it. To go back to your first question on the state of the economy, I had lunch with a very prominent investor yesterday who's very plugged in with the hedge fund community, and he said that the sentiment shift, I'd say, again, within hedge funds, professional investors, public market investors, had been very sudden, that people were now very worried about the risk of a recession. And I do think that the Airbnb revenue that Chamath cited is a big factor. Airbnb's stock went down 15% in one day on soft demand. And what's driving all of this is consumer weakness, or at least fear of consumer weakness. You mentioned the rise in unemployment. It went from 4.1 to 4.3% month over month. So 4.3 is still a pretty low number by historical terms, but to jump so much in 1 month, that's a pretty big increase. And then, of course, it's up from 3.5% a year ago. So we're seeing pretty big increases in unemployment.
10% year over year, 5% month over month is very significant.
Yeah. So these are big changes. There's real evidence of consumer weakness. And I think professional investors are getting quite worried about the risk of a recession. And I guess just one last point on this is that if you were to remove the impact of government spending, it's pretty clear the private sector is in a recession. I mean, like we've been talking about, government's been going hog wild with spending. The government is running 6% of GDP deficits. The latest Q2 growth number was something like 2%. So if you force government to live within its means and to cut its way back to balance, we would definitely be in a recession. We'd have a negative growth rate. So I do think that the economy is looking pretty shaky all of a sudden. Whether we actually tip over into recession in the next few months, I'm not sure.
All right. Well, listen, I want to corner everybody here with a question. You got to answer the question. You can't avoid the hard questions here on the All In podcast. Chamath, sitting here a year from now, market up, or we experience a recession defined as 2 quarters of negative GDP? Which one is the more likely scenario? Market up or a recession? Give it a percentage, or just which is more likely? Freeberg, you're next.
Well, those are not opposing things. So you're saying in a year from now? I don't honestly know.
Okay.
But I do think that we'll probably be in a technical recession.
Okay. So you lean towards, I'll just go recession, no recession in the next year.
But I also think that there's a pretty decent chance the market will be up.
Got it. Okay. So we could have a recession, but the market goes up. So to unpack that, I am with you on that same prediction, because I do think people are addicted to efficiency. They're going to lay people off, and earnings are going to keep ripping as these companies become managed so well.
That's a small percentage of the economy, Jake Al. That's a few tech companies. But much of the manufacturing sector, the industrial sector, the ag markets, there's a lot of markets where you don't have this option to just cut knowledge workers. The knowledge worker economy, the software economy has the ability to do that. The tech economy can do that. But much of the rest of the economy doesn't have a lot of maneuverability like we do in this fast growth, high margin kind of industry we work in.
I think it's a good point, but I do see McDonald's, Starbucks, and some of those consumer retailers are taking steps right now to right-size their businesses and offer $5 meals or $3 coffees. So I do think there's a shift in management and how they run these companies.
That's about reduced forecast, right? So when their revenue forecasts have to be cut, they have to cut headcount. That's different than creating more efficiency.
Well, but they're also cutting stores and they're
I mean,
cutting
these are
things and
yeah,
projects that are inefficient. So I just think there's going to be massive efficiency in all sectors. That's going to be the theme for the next year. But I mean, it's obviously
But that's
we're
a
going to
loss
debate
of
this.
jobs and a loss of growth, right? So just to be clear, when you cut stores, you have less growth. When you cut jobs, that's because you don't have as much revenue growth. So those are about
But earnings can go up, right?
They can be supported, but you're still facing contraction. And one of the challenges right now, a lot of food companies, a lot of retail companies have been raising prices to try and keep earnings going up. But there's hitting this natural inflection point where consumers no longer buy, where you find this tipping point. I don't know if you guys have been to the supermarket lately, but man, it is crazy expensive how like prices have gone up like 50 to 100% on like everything at the supermarket. And this is like,
it's basically impossible.
We can afford it. We can deal with it. But like a large percentage of people, this is a big deal in terms of like, now you have to budget your life and you spend less.
Nat and I, when we're here in Portofino, we go in the morning to the fishmonger and we'll buy, fish for the family. It is unbelievably expensive. And, we always think to ourselves, how is it possible that folks can actually choose to eat healthy and local? If they want to, it's next
What was a
to
branzino?
impossible.
What was a whole fish? Tell us.
Like if you want to
index.
have like locally caught sole, it's like 48 euros a kilogram.
Wow.
Okay. And like, it's expensive. And
wow.
it's
Like,
expensive
feels like
for
more
all
than a
kinds
restaurant.
So to feed a family of 7, which is what we are, you'll have to spend, $150, $200. It's not sustainable. It's not something that makes sense for enough people anymore, because that probably used to be $40 or $30. But Freeberg is right. Like, we're in a real serious problem because it's like these systems have remained the way that they have been for a very long time. And while other industries like the tech industry have captured all these incredible efficiencies, but the problem is that then these other industries are what supports everyday people's everyday lives. And in the absence of a way to actually reduce cost and improve quality, you end up where we are today. And I don't think that that's sustainable.
Freeberg, greater chance of a recession in the next year or not a recession? You have to give an answer.
Yeah, I think there's a great chance of a recession.
Okay, majority chance of recession. Got it.
But I do think that there's going to be government programs to mitigate the effects, meaning you could see the markets, the equity markets, continue to rally on some of the government programs and government activity, which has become kind of like the learned behavior. It's like Pavlovian. It's like we have an economic problem. The government steps in and spends money.
Let me get an answer from Sachs.
The reason why the markets could rally in the midst of a recession is because interest rates get cut. We've already seen that the expectations of rate cuts have now grown substantially. The markets are starting to price in 100 to 150 basis points of rate cuts this year, where before it was more like 25 to 50 basis points. So obviously lower interest rates make stocks go up. So I think that's the main driver of the rally you're seeing right now, Jay Cal, not the prospects for increased efficiency, because I think those prospects were already there.
So are you majority case recession or majority case not recession in the next year?
I've been predicting recession for like 3 years now, because I just think when you jack up interest rates so suddenly, so violently, you get recession. So I guess if you pin me down, I'd say recession. And I'll tell you one of the reasons why.
Interestingly, I've just checked the notes, Sachs. You predicted 5 of the 9 of the last 5 recessions.
I know. Look, it's the same recession that I've been predicting. It's very simple. When you jack up interest rates from near zero to 5.5%, that makes everything much more expensive.
Unless the government spends money, which has been the counterbalance, right? And that's a lot of why governments did. And by the way, I have a theory on this. I think this is also why we have an open border policy, or why the current administration has pushed an open border policy, because that can also be deflationary to counteract the effects of the interest rate accrual because
it lowers wages overall and fills jobs. It lowers
wages, it increases the workforce, et cetera, it creates more competitive workforce, but no one's allowed to publicly say that. And I do think that that's one of the primary motivating factors of having an open border policy.
Well, people have been saying it.
I think you just did. It's well said.
If you look at job creation over the last 4 years, there's been no net new job creation for native-born Americans. All the job creation has been foreign-born or...
Because native-born Americans have too high of a wage expectation. That's the fundamental problem, right?
And they're too affluent. I agree. Yeah.
I don't think it's too high.
Right. And I'm not making an argument one way or the other. I'm just highlighting, I think that this is one of the motivators for the policy.
I think it'd be a lot better to let their wages rise. But in any event, let's not get political on it. Just to the point about recession, Jason. I mean, yeah, look, I've been predicting the same recession. But I think one of the reasons why it might finally come now, first of all, you've got a lot of investors are suddenly worried about it. There's been a big sentiment shift. I think the other thing is I don't think we know all the bad news yet.
Unknowns. Yeah.
Well, none of us were tracking the yen carry trade it was something we may have heard of, but it's not like we were actively thinking about it until this past week. And the question is, how many more things are out there like that? And I also think that the pattern with this administration has been to hide the ball. They hid Biden's senility for years.
Yeah, not to get political, though.
Sachs, you just said
I'm just
not
saying,
to get political.
Not to get political. Biden,
Sachs starts out
Biden.
by saying, not to get political, but Biden.
This is just a fact. Look,
It's just fact. It's not political.
I was about to give him an award for saying not to get political
I know,
and moving on.
so good.
I'm making an economic point here, actually, and you guys can decide if I'm just being partisan or whether I have a good point here, which is, look, I think the MO of this administration has been to hide the ball. And any good news they would have reported. Do you think that they're reporting all the bad news? I don't. I think there's more bad news that's going to come out after the election because there's too many incentives for people to hide it.
And for people who don't know, we're talking about the concept of black swans. In order to have a black swan, it has to be something you're not aware of, and it has to have a dramatic impact. The yen trade would not fall into this because people were well aware of it, even if it wasn't front page news, and it didn't have a dramatic impact. But there could be black swan sitting there. Obviously, the black swan that you can think of recently would be in the great financial crisis, the subprime mortgage. That truly was massively impactful, and it was not known. .com was known and was massively impacted. You need both of those categories to define a black swan. And there could be black swans, right, Sachs, is what you're saying.
When you said that the yen carry trade didn't have a big impact, that's because the Bank of Japan backed off. So if they kept going with it, we don't know what the impact would have been.
Correct. But it didn't. So just so people who are tracking the black swan tracker, just the more you know.